Good evening, and welcome to the ShadowTrader Video Weekly for Sunday, November 4th, 2012. We've got a lot to cover in this week's edition, so let's hop right into it. We had interesting action on Friday in that it took us right up to resistance on the S&P at the confluence of the 20 and 50 period moving averages. So this is obviously a key level to note going forward in this week's trade. That's 1435 in the S&P cash. We did have an outside day in the ES in regular trading hours only. You don't see it here in the cash market, but I do believe that that's a bearish signal that is probably taking us to this 38.2 Fibonacci retracement level from the June lows all the way up here to these highs, and that would be at the 1394.63. So I'm going to be watching for a move to that area. We do have some support there in that area. If we fail that support, I don't know if the market can do this week or not. We do have the election coming up on Tuesday night. Don't know how much of a market mover that is. A lot of the economic data this coming week is weighted more towards the back of the week. Monday and Tuesday is really kind of quiet. So I think things are going to be kind of keying off the election there. If we do breach that 38.2, then the 50% retracement level, I would say, would be the next target in the market, would be right to that 1370 area. All right. Looking at the profile, things are interesting here in that I don't know if I can call it as bearish as it was on Friday or not, because there's a lot of conflicting signals here in the profile. I'm going to show you exactly what I mean. We had a huge pop in the markets on Thursday, which was a big up move out of the 5-day balance, right? If you recall, we had a big balance area that kept developing. Market was having responsive two-way trade, meaning it was just the shorter-term traders batting it back and forth. It could not break out of this range. And then on Thursday, we opened just outside of Wednesday here, and we did break out of the range, and we went hard to the upside. But the problem with that is that Thursday's trade gave us what's known as a letter P formation. I'll just leave that little letter P there. It's pretty obvious how it's a letter P. It goes up like this, and it forms a letter P. And the letter P is really indicative of short covering, nothing more. It tells us that this spike move, which forms the base of the P, is just people basically hitting the button, covering their shorts, and then some value develops up above, but it really is not indicative of any longer-term buyers. And interestingly enough, if you paid attention to this, you can see that Friday we actually gapped up over that level, but the open was very close to the high of the day, and the market sold off immediately, filled the gap, built a little bit of value around the same place as it had on Thursday, and then sold off hard into the close. So this is actually quite bearish. One thing that does stand out to me right away, a couple of things actually, is the fact that this profile is measured on trading hours only. So if you look at the trading hours only lows and highs of Thursday, we did have what's known as an outside day, right? Some people call this bearish engulfment if you saw it on a candlestick chart. Outside day is known to be relatively bearish in the profile, where you open up above the prior day's range and then you close down below it. The asterisks on the profile chart are the closes. Now, one thing that I would say is a little bit less bearish is the simple fact that notice that they sold the market off pretty hard into the close, leaving this kind of spike move to the downside, which is some excess, and in doing so, value did not migrate lower at all. You just, in the same way that this break here from the top is what's known as a liquidation break, which is the opposite of the short covering buying of the P, because, in the middle of the day before we sold off, you had the letter B, obviously, right? You had a developing profile, looked like a B. That's indicative of just long liquidation. That means short-term longs, overnight longs, whatever you want to call them, weak hands. They just hit the button, sell at the open as the market pops up, and they sell it off, comes down, and then finds some more two-sided action. But then when people started, traders started selling it off later in the afternoon, there was, not much support in this area, took it back to the balance area. Neither the point of control, which is the fairest price, nor value, which is this area, migrated lower, right? Notice that the greatest amount of time spent at the different price levels is way up here, but they sold off the market here. So this tells me that even though I do think the market can go lower in the near term in this coming week, in the very immediate, the market is oversold already. It went very quickly from a condition of getting itself oversold down in here, which caused a short pop, right? And then it got itself quickly overbought in the overnight up here, sold off on a long liquidation break, and now with a long tail here to the downside and no migration of the POC or the value lower, it's once again oversold. So, but again, on a very, very short-term basis, this is just judging what the shortest-term money is doing. And whenever that happens, when they get themselves short in the hole like this, meaning that value is higher but prices are lower, you have the propensity for a little bit of covering. And you could have just a pop move up. So what I'm going to be watching for early in the week is if that happens, given that we had the outside day, which I think is a more bearish, bigger picture signal, I'd be looking for areas to short, probably maybe on the value area low. Maybe we go all the way to the POC, I don't know. But I would be looking to exploit that type of, that bigger picture weakness and be thinking that any, moves up here are probably just short covering unless we can take out these highs, which would correspond with the with the cash market at the 1435. Okay, so that's what I'm looking at in the profile this week. Let me just get here we go. Get the markets back up. Okay, so trade ideas outside of the broad market, having the propensity to move a little lower. There's a couple of key things that I'm looking at this week. One is in crude, which has a pattern that I really like here, which I call buyers shut off in this case. And this is one of the most powerful patterns, I think, on any time frame. And what it is simply when one bar takes out multiple bars going up. It's actually this square here. And you can see here that it took a few bars, 3 bars to go up, and that all got erased in 1 bar down. And I call that buyers shut off. It means that these buyers here are shut off and they probably won't be able to take price higher. When I see this pattern, what I look for is any retracement up to 50% of the down bar to short into, because I think that there's going to be continuation and it goes lower like this. That's my ideology on the buyers shut off. So it can go lower maybe early in the week and not even retrace, but if it does retrace, I'd be looking to short any retracements into up to midway of this bar. You should not bounce more than 50% of the range of the bearish bar. All right. Another setup that I'm looking at this week is in gold, and all of these, by the way, are tying in with a stronger dollar that's popping. I've left the Fibonacci numbers on gold for you guys. Gold sold off hard on Friday. I've been telling people for a while that there's no play in gold up in here. I said, wait, nothing's happening. There may be an entry later. And gold is sold off very hard. And I want to draw your attention to this fib level here. This is measuring the entire move from low to high here. So it's, you're catching this whole move here all the way up to the top. And 50% retracement of that move is coming up shortly. That's going to be at 1662.50, which ties in with the 200 period moving average, which is this blue line. So I think there could be a bounce trade there. If we lose that, then we'll have the 61.8, which would be an even stronger trade. I don't know what gold is going to do here. I'm kind of having an idea going forward that the 50 is going to be a more shorter term trade and it's not going to hold, only because the amount of momentum we had on Friday coming down into it is really, really strong, and it's early in the move. Like if we had already come down a bit and then you had big momentum into the end of the move, I would say maybe the move ends at the 50. So I'm almost thinking here that there may be enough propensity to go right through the 50 after maybe just a short-term bounce trade and make it to the 61.8, which I think would be a better trade for like a longer-term bounce because it will tie in with an ascending trend line here of the move and also these prior highs. All right, so that's my outlook on gold and crude, which is what I'm going to be really focusing on this week. And as I was saying, these trades here are tying in with a dollar index that seems to have really broken out this week. I talked about this on the Tasty Trade show, probably in one of the early sessions when we first started the show a couple weeks ago, and I was saying that notice that the DX keeps bumping its head in the same area, and it was having multiple touches in the same area, and then failing to go lower here below the low, and kept rallying to that area. And after moving around a little bit, then you had the break on Friday and went much higher. So I think the door is open to more dollar strength, probably to these prior lows here. See the prior lows here, which also ties in with resistance up in this area. So dollar's probably going here, and that would tie in with the crude going lower and with the gold going a little bit lower as well. Last thing I will leave you with is just the fact that on that crude chart, while I think that the short-term down trade is going to be good for a trade, I don't know where it's going to land and end up. It will be very, very interesting if crude can fill up the triangle, so to speak, as I call it, meaning you can make it all the way down to the bottom. When I say fill up the triangle, it's kind of a pattern like this. That wasn't very good, actually. I'll draw this a little better. You can imagine like if you had a trend line. Oops, that's not good. Imagine if you had like a trend line here. These drawing tools are kind of unwieldy. Imagine like this, and then this is your triangle, and what I call filling up the triangle is it needs to fill up this space in here and come down to the base of the triangle as support. I don't know if we make it all the way down there, but I think crude would be a screaming buy at those levels. However, in the near term, remember, buyers seem shut off here, so I think crude a little bit lower, at least to like the 81, 82 level in the coming week. So it's something I'm going to be looking at for a short-term trade. All right, that's all the time I have for today. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.